Hello and welcome to the new year. Hi, I'm Barry Page with Legacy Money. I hope that your holidays were full of love, joy, and abundance, and that 2024 will bring you even more joy and abundance. In this episode, whether you're watching or just listening, I'll be discussing the macro economy and what you can do to secure your financial future in your own personal economy. Before we get started, I want to thank you for your support, comments, and for being a part of this channel. And if you haven't already, I'd like to ask you to give me a thumbs up and subscribe to our channel. This will allow me to grow this channel according to the online algorithms and provide you with even more and better content. First, a quick recap of 2023. It was certainly a good year for the markets, but did you realize any gains? While the markets rallied, most forget that the NASDAQ and the S&P 500 are just getting back to where they were 2 years ago. The Dow Jones reached an all-time high. You have to sell in order to realize a gain. But unfortunately, most people's investments are tied up in qualified plans that they can't access without penalty until they reach retirement age. And although the so-called soft landing appears to have come and gone, many fear that the worst is yet to come. So this has sparked market expectations, and many investors are already looking for the next rate cut. Looking at the big picture in our macro economy, we kicked off 2024 with many of the same hopes, worries, and confusion that 2023 ended with. The only thing that seems to have changed is that Wall Street is reacting to what I call Fed speak. You know, when Jerome Powell speaks, people listen. Consumers have been told to remain the course and that the economy is strong and stable, while accredited investors are gobbling up assets and betting on future rate cuts from the Fed. Inflation continues to haunt traditional households while politicians spar over how much they will spend in the upcoming year. But these realities can leave us doubting our future, or either inspire us to take control of our financial future. Our personal economies are much more important than what's happening on Wall Street. Having access to capital will become more important in the coming years. The true cost of inflation will become more apparent in the near future, and what were considered normal purchases will now be considered major expenses. This is where the benefits of having a cash reserve available become more important. A reserve that can get you through the tough times and enable you to capitalize on the opportunities that will arise. Regardless of where you are in life, rich or poor, it's always a good thing to refresh our mind and form good positive habits. Focusing on your personal habits of saving more and spending less can allow you to become a wealth creator. And once these habits are learned and practiced, they can be passed on to the next generation. For those of you that can afford to and want to assume more risk, I believe in the coming years the opportunities will be plentiful. But be prepared for volatility. Having access to capital during this time will be very, very important. Just this week, Bitcoin ETFs were approved. This will bring massive investing in Bitcoin to the general public. Timing will be critical, as well as education on the subject. And most people just don't have the time or the knowledge to get involved. Having large plan administrators like BlackRock, Vanguard, and Fidelity doing the trading, normal investors will be buying speculation. Any investment requires education and discipline. On one side, leveraging one asset to purchase another higher growth asset can provide exponential returns. On the other side, the risks are greater, and without proper care and management, the losses could be devastating. We all know that our macro economy has been teetering on the edge of disaster for some time. All the while, inflation risk, tax risk, and extreme volatility only compound the problems. According to many economists, we've been living in a bubble and we're due a correction. This is where owning assets with stability and certainty will shine. But safe assets that provide liquidity, use, and control are few and far between. Cash value life insurance is one of those assets. It's a financial tool that safeguards your capital while providing multiple benefits, all while allowing you access to an ever-growing pool of capital and financing your own purchases utilizing the infinite banking concept, or IBC, allows you to recapture interest that you would otherwise transfer away to others and build wealth for your future. If you're already practicing the infinite banking concept, being wise with your investments is prudent. I want to share a few success stories where policy owners have used the cash value in their life insurance to pursue their dreams and build some of America's most well-known brands. In 1929, J.C. Penney used the cash value in his policy to make payroll for some of his 1,400 stores during the Great Depression. In 1955, Walt Disney took out a loan against his policy values to create Disneyland when the banks would not loan him any money. Also in 1955, Ray Kroc used capital from his policies to create the McDonald's fast food chain. And in 1980, Doris Christopher borrowed against her policy to create the Pampered Chef. Imagine having access to capital when you need it for cash flow and when you want it to invest in opportunities. A cash value life insurance policy from a mutual company can help you realize your dreams too. These policies have guarantees and participate in dividends that accumulate on a tax-advantaged basis. You can access the available cash values at any time for any reason through loans or withdrawals. Premiums remain level while the cash values and death benefit grow over time. And by practicing IBC, you can turbocharge your whole life insurance policy and make major purchases without having to depend on the banks and financial institutions for lending. You can repay the loans just as you would with a traditional bank, except you'll be in control of the terms. When you become your own banker, you have access to capital in your own private reserve that you can access at any time for any reason without bank qualifying. And it's possible to do so with no taxes due under current tax laws. Here's what's important. The growth of the principal are both predictable and guaranteed. In an uncertain world, this provides financial security that you can't get in the markets. And while you might want to have other risk-based assets for the hope of a higher return, it's important to have safe assets for certainty and security. So in closing, I'd like to encourage you to learn from history and to look forward to the freedoms and opportunities that we've been granted. Focus on your own personal economy and protecting what's really important to you. Utilize safe financial tools that have been proven over time. And prepare for opportunities by having access to capital so you can reap the rewards for yourself, your family, and maybe your business. If I can help you, just let me know. Thanks for watching, and I'll see you in the next video. Remember to subscribe if you haven't already and click the bell.